No, I'm telling you, I'm looking at the chart right now. That's not what it's doing. I I know that's what it looks like, but it's not. It's gonna go the other way. I'm tell. All right, man. Anyways, I'll hit you up. I gotta call you back. Oh, hey, what's up, guys? Yeah, look, I know you probably noticed by now, but whatever. We're just gonna talk about it. Let's talk about the elephant in the room. I'm not talking about you, Ajit. The other elephant is the fact that yes, I am stressed out. All right, I even have some gray hairs coming in somewhere. I don't know. Somebody told me I have some gray hairs, but we'll figure that out. But the reason for all this stress is because I'm always asked, how do I know where it's gonna go? Is it going up? Is it going down? Does this look right? So today we are going to talk about something that is so important, and that is patterns. So now, before we get into it, if you haven't already, hit that subscribe button, join the Bearish Bully family. If you like the content, hit the like button to let me know that you do. It helps out the channel. If you have any questions or comments or even ideas for a later video, let me know in the comment section and I'll definitely reply to you as soon as I can, and I'll post a video on it as soon as I can. Alright, so what we're going to do is start off with some bullish patterns. Alright, now right away, okay, first of all, I'm using Apple's chart, which is on January 27th. This is a minute chart, so it's just showing 1 day, 1 minute, but right away I see about 3 or actually 4 different patterns that are playing out here, which we can cover. Different charts, you're going to see different patterns. So on a 1 minute chart, if I see something and then I go to a 5 minute chart, I might see something completely different. So always make sure that what you're trading, if you're looking to trade something very short term, you're aggressive, you just want to get in and out, 1 minute charts are probably your favorite. 5 minute charts are good as well. It just depends on what you're comfortable with. So always trade based on your comfort level. Just because I'm doing something some way does not necessarily mean it's going to work out for you. I'm not a financial advisor. I am just showing you guys what works for me, as it may work for you, or at least it'll help you to find something that you're going to be comfortable trading. Right away, one pattern that I see, which is straight out of the front. Okay, you've got a bull flag set up. Now there's actually a bearish pattern here, but we're going to cover that when we talk about bearish patterns. But right away you see a bull flag. Okay, now a bull flag is basically a flagpole. So you know, we're going to make some drawings in here. So here you go. Now this line pushing up, that's the pole. Okay, now when you see something going down, coming up, going down, coming up, normally that's a line or an area of consolidation. So in this one, you have one leg up, then you got one leg going halfway down. So once it stops here, there's a reason why it's stopping. So you see right from the start, you have a little drop right down till here, but then it bounces. So this is a level of support. When it broke down even further, it came back, it became a level of resistance. So now this is an area that you have to watch for. All right, so once you have this massive run up and it breaks through this level, when something breaks through a level, doesn't necessarily mean, oh man, let's buy it. No, it has to come back and retest. It might come back and retest right away. It might take some time, but either way, keep an eye out for that level. So now once it made this huge run up, it consolidated, or not consolidated, it actually hit a level of resistance. Okay, so now this is a new level of resistance. Then it backtracked, but when it backtracked, it came right back down to this level. All right, so you see here, if we draw a line, it's a perfect line. So it came right back down there and it bounced. Okay, so when it bounced from there, it's going to make another leg up. Now it usually doesn't have to bounce from here. I mean, it could break through and that'll just show weakness. So it means it's probably going to go down further. All right, but it did. Now it didn't come all the way back up to the same level. So obviously it's not showing a great deal of strength, but this is still a great pattern to follow. So a lot of times when I'm trading, I like to do quick trades. So I'm always looking at a minute chart And when I see something like this, if I see it just drop straight down from the gate, comes down here, I won't buy right away, because obviously you want to know if there's a level of support or if it's a fake out. A lot of times there's these dead cat bounces. All right, so you want to make sure that you keep an eye out for that. So it did come up, but it came back down, and then it ran up, hit the level, came back down. So once it came back down here, it made a lower high. All right, so you got one level of low, then you got a higher level of low. So this is the area where I would wait for the next 2 bars. All right, and the reason is because once you have it come down, you want to make sure that it's not going to drop anymore. So you got a green bar here, you got another green bar here. So now that's perfect. So that means it's showing a sign of strength. Now the third bar is where you make your decision. Do I get in or do I not? You got your 2 bars here. It's giving you a pretty good sign. You got your third bar here, which is a green bar. That is your confirmation. So this is where I would always make my entry. All right, just to make that really quick in and out play. All right, so I make my entry and now I'm running it up. Once it gets to that level of resistance, I could sell. So by the time I get out, obviously I'm not going to get out right on the peak because I don't know where the peak is, right? You've got one flag here. You've got one candlestick here, which is a red candle. It came back down, but then it came back up. So now you've got a little bit of resistance. All right, so this is probably where I'd take my exit. Now it'll come back here and I already have that line in my head that, okay, this is the level that it needs to show me some support. So if it does show support, it'll bounce off of here. I can get back in, I can make another run up. Once it gets into resistance, I'm already above my entry point, so I can take some profits. Or if you want to hold, if you have more confidence, then you can set up a line here. So you'll know that this is a level that it needs to hold. All right, if it's not going to hold this level, then obviously it's done. So you still got the same pattern going on here, but now one thing you'll notice, it is holding, but it's making lower highs. All right, so when you got lower highs and it starts making lower lows, it broke past your level of support. So now that's usually a pretty bearish sign. All right, so this is one massive triangle, and usually when you're trading something and you see a triangle formation, you want to make sure that it's either breaking out to the upside or the downside. So now this went from a flagpole or a bullish flag, but it actually changed into a, I guess you could say it's a falling wedge, and it broke bear. All right, so breaking bear means it's breaking to the downside or it's bearish. If it breaks to the upside and it's bullish, then that's great. So what you want to do now is wait for confirmation. So some people would panic and sell. If they panic and sell, but then it comes right back up and it breaks above, then you miss out on some gains, right? If you just want to cut your wins or cut your losses early and just let it play out the way it does too, then that's safe. You know, play your comfort, trade your comfort. So let's look at a 5-minute chart now. We're going to be looking at NEO on January 5th. So on this chart, there's another bull flag over here, which we could start off at this point. Now, it's not the cleanest, but it's still the same thing. So if we draw a line here, you got one run up, then you've got one run down, but it came back to a pretty strong level here of support. So as you can see before, it was breaking up, breaking down, breaking up, breaking down, breaking up, breaking down. Then finally from here, it just made a nice clean run up here. A little hesitation because of the resistance level. Came down, but then just broke bull. So actually you got 1, 2, 3. So that's one pattern. And then you got another one. 1, 2, 3. Now over here it consolidated and then it just kept running. But the overall pattern is 1, 2, 3. Straight to the upside. So this is nice. It's like a lightning bolt. Pretty easy to read. All right, so that's a very common bullish pattern. Now, once again, this is on a 5-minute chart. So if we're looking at a 1-minute chart, you might not see it as clear. And obviously, you're not going to know from here, like, oh my gosh, yeah, this is about to make a bull. No, you're not going to know. But you are at least going to know that you have a level of support, you've got a level of resistance. Once it breaks past a certain level, so if this is running up here and it starts going up here, comes back down here, now you know that if it's not going to break below this, this is a perfect entry point on a 5-minute chart for you to get in and just enjoy the gains on the run up. Alright, so for this one, we are going to look at some bearish patterns, alright, or when the chart is showing you signs of a downtrend. For this, we're going to use the SPY, ticker symbol SPY, which follows the S&P 500 index, and this is on January 29th. So on here, we see once where it's consolidating and it goes into a peak, and then it just drops. So similar to the bullish pattern that we saw, this is just the inverse. So it comes down, it consolidates, but now you see over here, it was once a level of resistance, actually support turned resistance, then over here it broke through, came back down, so another level of resistance, then here was support. So now you want to see, it broke through the support, came back, it's testing the resistance level, but it's not able to break through. So it's going to make another leg down. So there you go. You got an ugly upside down lightning bolt. So that's usually a sign, well, you already figured it out that it's going down because you're already down. Now from here, it's bouncing off of another level. Now this could be another support level. So when it comes down here, it'll bounce off of it, which usually a lot of people love to play these. So these are dips, massive dips. You do like to get in when it dips, but the problem is you never know when the bottom really is the bottom. So it's always good to wait for a sign of reversal before you do get it. All right, so once it's running up, it stops up here. Now this is right at the level where this was bouncing off. So over here you have support, which now became resistance. So that means it does not have enough strength to break through. So it was going to continue the down run, and it did massively. Now, when it came all the way down here, obviously it bounced, it starts to do a little bit of consolidation, and then it makes another run up. So over here, you can see you'd want to wait. It makes a nice bull flag, very small one. You got your pull, you got your triangle, and it broke bull in the triangle. Okay, so there. And then it just extends. Now, not necessarily a good sign of strength, but it is making it does honor the pattern, so that is good. There are a lot of other patterns that are on this day. This day just clearly had tons of volatility. All right, so we're gonna go ahead and just stick with this chart, and we'll talk about a couple. Actually, you know what? Since we're here, we'll just discuss another reversal or a bearish signal. You see up here, it came to the 384.90 level. It couldn't break through. It dropped. It came back up, tested it again, almost broke through a little bit, but it just couldn't hold. It dropped. Came back up, tried to test it again. It could not break through, and it drops. And then again, it tries to touch it, and it cannot break through, and it tanks. So a lot of times, if you see something where the resistance level is just too strong, if you get it on a bottom and you just run it up, you want to play it safe and say that, you know what, I'm going to get out. So if you see that 384.93 is the level of resistance, what I would do is I would set my sale at 384.75 to 384.80, only because there's going to be a whole bunch of other people that are also looking to get out just before those levels. So with the amount of size that you have, the amount of positions, whether it's 100 or 1,000 or 10,000, you want to make sure that you're getting out before it actually comes back up to the level of resistance, unless you have solid reason as to why you feel it's going to break above 385. If you don't, and you're just trying to play the chart, trying to play the pattern, stick to the safety. If you're making a good run from here or from here all the way up here, chances are you made a pretty good profit. So take your profits. Ain't nothing wrong with taking profits. All right, now we'll go ahead and stick with this chart and talk about a reversal pattern. All right, so there is a massive reversal pattern that I see right here. I'm pretty sure you guys see it too. It is the probably most common one, which is just a gigantic W. So we got one. Now this is from pre-market, so not every time is it going to play a part in the reversal pattern, but clearly here it did work. So you got one leg down, a very ugly leg down. You've got one leg up, another leg down, and another leg up. So one thing you'll notice, it did not make this leg up as high as the first one. Whenever something is indicating a bullish reversal, a W for example, the middle of the W should be much lower than the two ends. If it's not showing you that, then it's not going higher. All right, so this is kind of like a fake out. All right, so always watch for that. A lot of times when you see a reversal pattern, you might think, okay, you know what, this is perfect. Yes, the double bottom, that's great. Double bottom is awesome. So that means you got in here, it's going to go up here. Or if you get in here because you see that it already touched, is just a double bottom reversal. A double bottom reversal, yes, it is. All right, you got the clear line. It tapped off of it twice, and it's going to make a run up. Sure. However, for a W reversal, which means it's going to continue that run up, that is not there. All right, this is higher than the other leg, and it cannot. The center has to be much lower for it to actually constitute as a bullish W reversal pattern. All right, but at least you do have the double bottom reversal, and that is fantastic. We'll look at another reversal pattern. All right, so we're still looking at the SPY 1 minute chart. This is going to be January 29th. Now here you've got another reversal pattern that's got pretty good confirmation of where it's going. So you've got one leg that goes up, you've got another leg that comes down, another that goes up, and another one that confirms this is going down. All right, so you've got both of the outside legs, which are larger than the center. So you know that this is a perfect reversal pattern to the downside. One, it double topped on the, well, it didn't necessarily double top pre-market, but it did come back close to the pre-market highs, and it just could not hold. It did double top here, and then it just made a run down. Even on Apple, now this is something I wish I would have seen earlier. I couldn't see it on the minute chart. All right, so over here, yeah, I have my trend line set up, but there's something here that I did not catch until the end of the day. All right, and it's because I was looking at the minute chart. Now, had I been looking at the 20-day 1 hour, I would have seen it as clear as day. All right, so if you look at this chart, one thing I've noticed is a very bullish pattern. So you've got your pull, you've got your slight run up. Now once you have this, so you've got like an upside down flagpole. It runs down, consolidates, it's coming back up, and then it just breaks through. So this is very, very common, and I completely missed this on Friday's trade or yesterday's trade. But had I seen this, then I would have known to exit my position here, or closer to the top where I was actually watching it, and I could have done it, but I didn't. That's okay, it happens to all of us. And it now I just have to wait for it to come down and test this level of support. If it tests this, that's fine. But I do have a feeling now that since it did break through here, it will continue downtrending. The only reason why it didn't downtrend as fast is because it was after hours and there was less volume. So we'll see what happens on Monday, but I do believe it's going to come down to the 128.50 level or 128.75, and we'll see if it bounces from there. That's great. It's got some it has some hope for a reversal. If not, then it's going to continue down. All right, so that was just a little bonus bearish pattern to look at. So there are so many different patterns. I just covered a few of them, but you've got bearish patterns, bullish patterns, continuation patterns, reversal patterns. What I'm going to do is I will put a link down below to a page that can show you guys all the patterns, entry points and exit points if you guys are in a trade and you think that you do see a pattern, you can use this to confirm it. I do send this out to a lot of other people that I speak with, so I think this would be great. It'll be super helpful. I know it's definitely worked for me. It saved me so many times. Sometimes when I'm just really stubborn and I'm holding something, I need to confirm that, okay, you know what, this pattern is actually playing out. When I look at this pattern, then I'm like, okay, you know what, I have that confirmation, so let me just get out of the play, or let me stay in this play because I do see it's going to work in my favor. So make sure you check out that link. I hope you guys were able to find this video useful. If you did, please give me a thumbs up. Let me know in the comments section if you guys have any questions, concerns, requests, if you guys want me to put out any other type of videos. Of course, I do still have a lot of other videos that I'm going to be putting up. But yeah, I definitely hope you guys end the week green, and I will see you guys in the next one.